Hey everyone, welcome back for another deep dive with me. This time we're looking at something that's got gamers and investors alike all riled up. Electronic Arts Q3 FY25 earnings. We've got the press release right here. We've got the earnings slides ready to dig into all the juicy details. And let me tell you, something jumped out right away. EA is buying back a ton of stock. Like we're talking $1 billion pumped into an accelerated repurchase program. That's a bold move. Why are they doing that? Well, that's one of the big things we're going to be exploring today.
Yeah, it grabs my attention. It's the sheer scale of this buyback.
Yeah.
It signals that they really believe in their own future. It's like they're putting their money where their mouth is. They're saying, "Hey, we think our stock is undervalued,
Yeah.
and we're ready to buy it back." So,
Yeah. Okay, so they're betting big on themselves, but is it just a hunch? Or is there something real behind this confidence? Are there concrete signs that EA is headed for a bright future?
well, let's take a look at the heart of their success. Their sports franchises, specifically EA Sports FC 25. It's not just a hit, it's a global phenomenon. We're talking about net bookings for the global football franchise, up over 70% in the last 5 years. That kind of growth puts them in a whole other league, not just in gaming, but in sports entertainment as a whole.
Well, 70%, that's not just scoring a goal, that's like a hat trick. But, in the world of these live service games, it's not just about the initial sales, it's about keeping players engaged, coming back for more.
Oh, absolutely. And EA seems to have figured that out, for example. Their January gameplay update reactivated over 2 million Ultimate Team players. They know how to keep their audience hooked.
2 million reactivated players, that's a huge influx. So, what's the secret? How are they keeping people so engaged, especially in such a competitive market?
I'd say a major factor is their mastery of this games as a service model. They're constantly updating content, running events, and of course, let's not forget, those in-game purchases. These tactics aren't unique to EA, but they're really good at implementing them, especially within these sports franchises.
So, they're playing the long game, building a community around their games. And it seems like that approach is working, not just with EA Sports FC, but with their American football games too, right?
Absolutely. We're seeing double-digit growth in weekly active users for those titles. They're even on track to hit $1 billion in net bookings this fiscal year. That's huge. This consistent success across different sports franchises really proves EA knows this market. They've found a winning formula, and they're replicating it.
Okay, so they're the kings of the virtual sports arena, but what about their other franchises? What's beyond touchdowns and goals? We know there's a new Battlefield game coming up, and I gotta say, I'm really intrigued by this Battlefield Labs thing. It seems almost revolutionary.
Oh, yeah. It definitely has the potential to change things, traditionally. Game development has been pretty closed off. Developers work behind closed doors. Players get a finished product. That's it. But with Battlefield Labs, EA is actually inviting players into the process, getting feedback, testing early builds.
So it's like a giant interactive focus group. Instead of relying just on internal testing, they're tapping into the collective wisdom. And let's be real, sometimes the brutal honesty of their players.
Yeah, exactly. And that has the potential to be really beneficial. Think about getting real-time feedback on features, finding bugs early on, even testing new gameplay mechanics. With the dedicated group of players, it could really streamline development.
And help them fine-tune the game before it launches.
Sounds like a win-win. But
Yeah.
is it really that simple? Could giving players that much power lead to chaos? I mean, what if there's conflicting feedback? Or too many features? Or the game just loses its vision with too many cooks in the kitchen? You're right. Those are all valid concerns. Finding that right balance is going to be crucial for EA. They can't let the feedback completely control the game, but they still need to make players feel heard. It's going to be fascinating to see how they navigate that.
Yeah, I'm curious to see how it plays out. It's a risky move, but whether it succeeds or fails, it's bound to have ripple effects throughout the industry. But before we get too deep into the future of game development, let's take a step back and look at EA's current financial situation. We've got a lot to unpack, so let's shift gears and dive into the numbers, shall we?
Let's do it.
Okay, time to put on our financial analyst hats and dig into these earnings numbers. We've talked about the big wins, but what's the full picture look like?
Well, first we got to understand, we're not just talking about revenue here. It's about net bookings. It's a key metric for gaming companies because it shows the actual value of products and services sold, including things like those in-game purchases we talked about earlier. So EA's Q3 net bookings came in at $2.215 billion, which is substantial. But it is a slight dip year over year.
Okay, a bit of a stumble. Considering their success in sports games, this dip is a little surprising. Should we be worried, or is this just a blip?
It's all about context. The whole gaming industry has slowed down a bit. After that pandemic boom, remember during lockdowns, gaming was the thing to do. So as things have opened back up, spending habits are naturally shifting.
Right. People are venturing out into the world again, exploring options beyond their screens.
Exactly. Plus, EA's in a transition phase, phasing out older titles, gearing up for major releases in FY26, like that new Battlefield game. So this shift can impact bookings in the short term.
So they're playing the long game, sacrificing some immediate revenue for a potential bigger payoff later. It's like planting seeds for future growth. But are they being too optimistic? Do their projections actually back this up?
Well, their guidance for the full fiscal year 2025 suggests they're confident. They're expecting net bookings between $7 billion and $7.15 billion, which is still pretty healthy, especially for a company going through a transition, as we've called it.
Okay, so this dip isn't setting off alarm bells just yet. But what about their overall revenue? Is that showing a similar trend?
Their Q3 revenue came in at $1.883 billion. Again, slightly down year over year. But we got to remember those same factors we talked about. The industry slowdown and the strategic changes in their game portfolio. It's not as simple as less revenue equals bad news.
Right, it's more nuanced than that. But can we break down that revenue a bit? Where exactly are these billions coming from?
Sure, EA's revenue comes from two main buckets, full game sales and live services and other. Full game revenue is pretty straightforward. It's the money from those initial game sales, whether digital downloads or those, dwindling physical copies. And live services and other includes things like in-game purchases, subscriptions, DLC, basically anything that makes money after that initial purchase.
Ah, the stuff that keeps players engaged. And spending money long after that first purchase, it's been a really successful model for a lot of game developers. But is EA really capitalizing on it?
Well, absolutely. In Q3, live services and other revenue brought in $1.284 billion. That's way more than their $599 million from full game sales.
Wow. That really shows how vital these ongoing revenue streams are for companies like EA. It's not just about selling the game anymore, it's about creating this whole ecosystem around it.
Exactly. This is where their games as a service model really shines. Think about Ultimate Team in EA Sports FC. Players are constantly buying packs, participating in auctions, building their dream teams. It's a smart system that generates consistent revenue.
Yeah, it's like they've created a whole in-game economy with its own currencies and markets. Fascinating and clearly very profitable. But there's another trend impacting that full game revenue, the shift from physical to digital.
Oh, absolutely. In Q3, full game downloads brought in $446 million, compared to just $153 million for packaged goods, meaning physical copies.
So those days of lining up at midnight for the latest release are fading away. Digital is winning.
Yeah. Digital is just so much more convenient. And it integrates seamlessly with those live services. Makes it easy to jump into those in-game purchases and expansions.
Right. It's all connected. Okay, so we've got a good handle on net bookings and revenue. But there's another financial metric I'm always interested in, operating cash flow. It's like the lifeblood of a company. How's EA doing there?
They're doing really well. In Q3 alone, they generated $1.176 billion in operating cash flow. And over the last 12 months, that number jumps to an impressive $2.11 billion. They're really good at converting their operations into cash.
Those are some healthy numbers. Sounds like they have plenty of room to invest in growth and weather any storms. But speaking of big investments, I got to bring up that massive stock buyback again. $1 billion is a bold move, especially considering their profits aren't exactly sky high right now.
It definitely raises some questions. Some analysts see it as a sign of confidence, a smart way to boost share value and reward investors. Others wonder if the timing is right. Maybe that money could be better spent on R&D or acquisitions.
So it's a gamble. They're betting big on themselves. But is it a smart bet? Do they have the financial stability to pull this off without jeopardizing their long-term goals?
That's the million-dollar question.
Yeah.
To answer it, we need to look closer at their balance sheet, their debt levels, their overall financial health. It's a complex equation, and one we'll unpack when we come back for the final part of our deep dive.
Okay. So we've crunched the numbers, analyzed the trends, but let's not forget about the games themselves. We talked a lot about EA's success in sports, but they're not a one-trick pony. I'm still thinking about that new Battlefield and that whole Battlefield Labs thing. It's like they're changing the way games are made.
Yeah, it's a big departure from the traditional model. By bringing players into the development process, they're creating this feedback loop that could lead to some really innovative and engaging games. Imagine tapping into the creativity of your most passionate players. The potential for fresh ideas and community-driven features is huge.
But it's a risky move, right? We talked about the potential problems. Too much player influence could create a game that tries to please everyone and ends up being nothing special. How do you balance incorporating feedback and maintaining a clear vision?
That's the big question. There's no easy answer. EA is going to have to be really picky about which feedback they use. They need to prioritize suggestions that fit their vision for the game. And transparency is key. They need to be clear with players about which suggestions are being considered, which ones are being rejected, and why.
It's a tough balancing act. On one hand, you have the chance to create a game that really connects with the community, a game shaped by the people who will be playing it. But on the other hand, you risk creative chaos, a game pulled in too many directions, and ultimately losing its identity. It's a high-stakes gamble, and the outcome could impact the future of game development as a whole.
Absolutely. Other studios are definitely watching this closely. If Battlefield Labs works, we could see a lot of similar initiatives pop up. Imagine games co-created by developers and players, a true partnership that leads to richer and more engaging experiences.
That's a cool idea. But it wouldn't be easy. It requires a change in thinking. For both developers and players, developers need to be more collaborative, and players need to understand that not all their feedback will be used.
It's all about trust and respect, a two-way street, where both sides contribute their expertise and passion to make something amazing.
And let's not forget the potential impact on the gaming community. If players feel like they have a real stake in the games, it could create a stronger sense of ownership, a more dedicated community, and ultimately a better experience for everyone.
It's an exciting possibility. But EA isn't just focused on changing development. They're also exploring new frontiers in gaming, like we've seen with their success in mobile. EA Sports FC Mobile, for example, is seeing double-digit growth in new players and engagement.
Mobile gaming is a whole different world. It's accessible, convenient, and it's attracting a whole new generation of gamers. How is EA adapting to this market?
They're embracing free-to-play, offering games that are free to download, but generate revenue through in-app purchases. It's a tricky balance, though. Those in-app purchases need to feel fair. They can't create a pay-to-win environment that turns players off.
Right. It's a different way to make money. You're not selling a finished product up front. You're offering a service, an ongoing experience that players can choose to invest in further. But let's be real, these microtransactions can be a slippery slope. How does EA make sure they're not taking advantage of players or creating something addictive?
Transparency and choice are essential. EA needs to be open about the costs of those in-app purchases, and players need to be able to enjoy the core game without feeling pressured to spend money.
It's about walking that fine line. And ultimately, it comes down to trust. Players need to believe that EA is offering a fair and fun experience, no matter how much they spend.
Exactly. It's about building a sustainable system that benefits both the company and the players.
Okay, so we've looked at EA's big moves in development, their success in mobile, and their bold financial strategies. It's clear they're not sitting still. They're pushing boundaries, taking risks, and shaping the future of gaming.
They definitely face challenges. The gaming industry is competitive, and staying ahead means constant innovation and adaptation.
But they seem ready for those challenges. They've got a solid financial base, a talented team, and a deep understanding of their players.
And most importantly, they're passionate about games, driven to create experiences that entertain, engage, and inspire millions of players.
Well said. So as we wrap up this deep dive into Electronic Arts, what's the key takeaway? What do you want listeners to remember?
EA is a company in motion, a company that embraces risk and new ideas. They represent what the gaming industry is all about: dynamic, innovative,
And constantly evolving. And that evolution is something we'll be watching closely. Who knows what the future holds for EA? But one thing's for sure, they'll be at the forefront of the gaming revolution, pushing the limits and shaping the experiences of millions around the world.
It's a great time to be a gamer, and EA is right there in the middle of it all.
Well, that's it for our deep dive into EA's Q3 FY25 earnings. We covered a lot, but there's always more to explore, so keep digging, ask questions, and stay engaged in the ever-changing world of gaming.
Until next time, game on.